Season 2, Episode 7 with Sean Puckett. Sean is a chartered alternative investment analyst, a chartered financial analyst, and he is with Next Gen Financial Group. This is going to be really exciting, Andy. And Sean, thanks for coming on.
Yeah, thanks, Sean.
This is what we wanted to get to with this podcast, talking about alternative investments. And we have a specialist here who deals with this specifically. And I know that the accreditations he has, I've looked into them. Chartered financial analyst is one of the most difficult accreditations to get in finance for finance professionals. So very impressive that you have that, as well as the Chartered Alternative Investment Analyst accreditation. Thank you to all of our listeners. We are over 2,000 members on Facebook. I wanted to give a shout out with this episode in particular. Wanted to give a shout out to Rory Doss in Kerrville, Texas. He wants to find some investors for a ranch. Keisha Roberts in Florida, same thing, looking for investors. And then Kurt Sandberg in Colorado. He had some thoughts about liquidity, but maintaining ownership of the place. I think this is really going to apply. And the title of this podcast, this episode, is How Does the Average Person Invest in a Large Ranch? That is buying in, but I think that if the average person is investing in a large ranch, that goes for how does the average person liquidate part of their ranch. And before we get into that, I am going to ask our audience. We don't advertise, we don't monetize this, we don't have commercials or anything. Andy and I do this mainly because we like to hear ourselves talk. But the ask is, now that we're over 2,000 members on Facebook, 7,000 downloads on average, Levy, we want to hear some feedback. It's important to us. If there was a platform out there, if there was a marketplace to where the average person, let's say, what do you guys call them in financial advising? The teachers and the people you got to protect, the teachers and the pensioners.
There you go. Yeah, that's accurate.
The teachers and pensioners. If there's a way for teachers and pensioners to invest in a ranch, please message us on Facebook, shoot me an email, ranchinvestors@gmail.com. But let us know, would you be interested at maybe, say, $10,000 doing retail-type investing in real, legitimate, tangible ranches in the western United States? And is there a demand for that? So please let us know. And with that, we get some spam on the Facebook, some crypto bots, and they do messages. This episode has nothing to do with the Arabians who are promoting Bitcoin and crypto investments on our Facebook page and asking you to use some messenger app Facebook owns. I forget what the hell that is. WhatsApp. Yeah, they're asking you to pay them and talk via WhatsApp. So this has nothing to do with that. Let's get started, Sean. Please introduce yourself, your background, what we're going to be talking about with liquidity, a marketplace, retail investing in ranches, and alternative investments.
All right. Well, thanks for having me. I think I'll start basically, thank you for the kind intro of the CFA and the Kaya. Those are two designations I got from 2015 to 2019. They're long process, 3 exams, and then the Kaya's 2 exams, low pass rates. So that was a very difficult 4 years to achieve those. But going through that, I was actually working for the Treasury doing bank regulation. So that's where I started. I started in financial services back in 2011, so about 10 years in financial services. But during bank regulation, I got to work on the Dodd-Frank Act and also the Volcker Rule, where essentially you go into banks, you make sure that they're doing their trading correctly, and then the Dodd-Frank stress testing tells you whether or not they get to pay dividends that year based on a stress test where they shock their balance sheet and see what happens to their capital. But during that experience, I also got to look at a lot of ag loans, particularly in a bank in Utah. And, so I kind of understood the underwriting of, ranches and cattle operations and got to hear some very creative stories of some ranches in Texas. which was fun. But coming out the other end of that, I started working in, asset management, investment management for a company down in Scottsdale as chief investment officer. And then 2019, left there and started my own firm, Next Gen Financial Group. And, essentially helping individuals manage money on both the public and the alternative investment side. And through that, alternative investments, traditionally, you had to be an accredited investor.
Meaning a net worth of $2 million, liquid $2 million?
1 million.
1 million?
Excluding your house. Yep. And then there's some income deals too. You can get around that if you have 250,000 in income.
For 3 years in a row.
Yep. But if you think of, the benefit of alternative investments is generally the liquidity premium that you get. Because public markets, you go on, you can buy Apple tonight, and then you can sell it a minute later. If you're in the liquid markets, alternative investments have a liquidity premium, which is essentially if you're an investor going into a ranch or, a commercial building, you can't just go and sell it overnight, right? So your money's kind of locked up. There's a premium for that. Investors will pay a premium to get access to those. But if you think of, the United States, there's 13 million plus accredited investors, but there's 150 million savers. And the average saver has about $10,000. So if you want to start talking about how do people get access to alternatives, most times the minimums, I don't know what the typical ranch is to invest in, but I have to imagine it's well above $1 million. So if you're doing that by yourself, or maybe you have, another family you're going into it with, that's still, a lot of capital to get access to. So the high minimums are kind of a barrier to entry. They've always been a barrier to entry for non-accredited individuals to get access. Another reason is because of just financial literacy. I think there's an assumption by the government that if you're an accredited investor, you have some understanding of how markets work and investment. You may use a financial professional to help you. So it's also a mechanism to protect unsophisticated investors from pretty much getting screwed, which is a good part of it. But that's where a good financial advisor and due diligence officer and investment manager should be that kind of front line to help people get into those investments and do due diligence on them to make sure they're not getting screwed. And that's kind of my job.
Yeah, you guys are the most highly regulated industry in the world, and that is to protect the teachers and widowers. I remember that now, teachers and widowers. You gotta protect. The government believes that people aren't smart enough to manage their own investments, and so you have to protect the average blue collar worker out there who only has $10,000 in savings and maybe $350,000 in equity between their 401k and their home, but the upside benefits, and Andy has been tracking this for many years to alternative investments, ranches in particular, and we're talking about ranch land, specifically Western ranch lands, not the operation of cowboys and cattle and crops, but ranch land as an investment. It's exclusive, and that's unfair because it comes with such a high barrier to entry. You have to have such a high net worth that it is so exclusive that it leaves out a lot of people who could benefit from the inflation correlation of ranches, highly correlated ranch lands to inflation. It leaves them out from having other diversity. You probably recommend 10 to 15% of your portfolio should be in alternatives, whether that's coins, art, ranch land, classic cars, stamps.
Real estate,
10 to 15% held in alternative assets. The average person, unless they're going to collect coins and stamps, can't get any exposure to alternatives because it's the good old boys club. It is so exclusive to the ultra wealthy and the elite of the United States and the world. Correct me if I'm wrong.
And that seems to be getting worse. And the market we're in right now, is just hotter than hell, and inventory's down and prices are up, and so it's only getting worse.
So Sean, how do we change that? What is going to become? How do we fix that?
Well, there's been people trying to fix it for a while. So there's, 40 Act funds, specifically interval funds, those are semi-liquid investment vehicles that if you're non-accredited, you could go on to a platform like TD Ameritrade or Schwab, and you could invest inside of those. And they're essentially every quarter, they're able to liquidate 5% of the total fund. So if people want their money out of those, if you had a flood on the fund, like this is kind of what happened during COVID, there was a lot of real estate interval funds that weren't doing so well. And so a lot of investors went to redeem their shares, but they can only do 5% of the fund value. So if you went to redeem your shares out of that real estate investment, you maybe got 50% or 25% of what you actually were trying to get out of it. But that is a step forward to, a traditional go buy a commercial building. You got to find someone to market it, sell it. That could be months, right? They don't have that for land investing. There's certain restrictions inside those 40 Act funds where you can't, there's certain restrictions on the types of assets and the percentage weights inside of them. So they're trying, to open that gap between non-accredited getting access to alternatives. But what happens is, that's the traditional route. You're still the underlying properties and the shares. It's all done the traditional way, which is paper. So the costs are extremely high to run an interval fund.
High transaction costs.
Exactly. And admin costs. So when you start looking at investing in a commercial property, and then if you look at an interval fund, by the time you take out all of the fees, the liquidity premium pretty much disappears, and it's like you're investing in bonds. Like there's no benefit on a risk-return basis to using them because the fee structure is so high. That leads us to kind of what we were talking about, last night, and the more exciting part of this conversation, I think, is the advent of DeFi, which is decentralized finance, tokens. I don't know if your listeners, they following this NFT craze.
What is NFT?
That's a non-fungible token, and it's really hard not to get technical. So I'm just not even going to go down that route. But essentially,
digital currency, would that be a layman's term?
Yeah, digital currency, but it's essentially, if you have a single property, a non-fungible token is a unique asset. So like a piece of art, that if you wanted to consider that and put that on the blockchain so other people can buy a fraction of it, that would be its own NFT, non-fungible token, because there's no other piece of art like it. Bitcoin is a fungible token. I give you a Bitcoin, you give me a Bitcoin, it's the same thing, right? I give you a Mona Lisa and you give me a Van Gogh, not the same thing. So that's where you start looking at real estate. Each piece of real estate technically is unique, right?
Absolutely. It is 100% purely unique.
Especially in Montana.
Yep. No two parcels are alike, even in your 70-tract subdivisions.
Yeah.
Which, by the way, is fairly unique to the West. Because I know from, a lot of the training I do is nationally based, and a lot of the certifications and training for rural appraisers like myself is based on Midwest farmland, because that's kind of the dominant ag sector, I guess. But, out there, corn, 150 bushel corn acreage is 150 acre. It's much more of a commodity. It's much more, and it sometimes people, whether they're new to Montana or they're reviewing appraisals from Montana and they're from out of state, don't realize Montana land is not a good doesn't fit the definition of a commodity well in that sense. Neighboring properties can have almost no comparability to each other.
It's almost like every ranch has its own market.
Yeah.
Whereas in the Midwest, your farmland is a market.
Right.
Mm-hmm.
And with that, there are publicly traded REITs out there, Gladstone, which ticker symbol LAND, great ticker symbol, and Farmland Partners, FPI, and they do invest in farmland for the alternative asset investors, for those who want exposure to the appreciating land values, scarcity of resources, the future of food supply, all the reasons you'd invest in farmland, they're providing it. Normally, when you go public, you get a 15% bump in your price because of liquidity. But what I've noticed with Gladstone and FPI is now that they're publicly traded, they track with the market. They're highly correlated to what the market is doing, And that defeats the purpose of having a zero beta. It defeats the purpose of having no correlation, an inflation hedge, a hedge against the equities market. So what you're telling me, Sean, is you can keep the intrinsic value, the uniqueness of each ranch, and open it up to, how do you open it up to your everyday investor with this NFT and tokenizing?
So I think, if you just take call it a $10 million ranch, right? And and traditionally you would have maybe one or two ultra high net worth or high net worth investors coming together to buy that ranch, probably lease it out to an operation. If you think of the amount of buyers for that piece of land, I don't know how many, but I could tell you if you can figure out how to open that up to non-accredited investors and fractionalize that, where now if I have $1,000, I can invest in that property alongside thousands of other investors. That's really the mechanism to open the door to allow it. And NFTs, they should be able to provide that. And without getting deep into the weeds on it, I think it's essentially just think of it like a company. If the ranch is a company and you have originally two owners going into it, but now with an NFT, you can make that ranch, instead of having paper shares, so I give you your 50%, I have my 50%, we both have shares, a certain amount of shares that are on paper. You digitize those paper shares, and then you can slice and dice those paper shares so they're a lot smaller fraction. Because it's digital and all the accounting can be coded into that token, like dividends, distributions,
Taxes,
proxy voting, taxes.
K1 distributions.
Exactly. All the reasons I was telling you that interval funds are extremely high cost. The advent of NFTs in the blockchain, the whole point is to eliminate those intermediaries by automating all of that. And I'm by no means an expert in the blockchain or crypto or Bitcoin. I just know that this technology, from what I've been trying to do the last 3 years of democratizing alternatives and figuring out how to get the average Joe access to these investments that have typically been reserved for pensions and ultra high net worth individuals, this opens the door for that to be possible.
So you mentioned the $10 million ranch.
Yeah.
I think at any given time, a $10 million ranch has ready, willing, and able buyers. I think the market is, Andy, 500 individuals across the United States?
Yeah, maybe.
That's a pretty limited market, but if you open that up to union employees, bus drivers, and cooks, and other professionals, doctors who want the benefits of investing in a ranch, now your market is 25, 30, 40 million people as opposed to 500. And I love this concept because I would buy a piece of the Mona Lisa just to say I have a piece of the Mona Lisa. And I'm long on the value of Van Gogh, of Picasso, of Andy Warhol, and who's our guy out of Cody? Abstract expressionism.
I don't know. But there's lots of artists in Montana and Wyoming, you know, that
I would, and I'm long on the value of those pieces of art, or maybe it's a rare gem, that if you were to tokenize and democratize and open it up, I would start throwing money at some of these alternative assets. And so my ask of our listeners right now, is this something you would be interested in? Would you buy a token of a 20,000 acre Western Montana ranch? Land, and is that something you'd be interested in? Just please hit us up on Facebook or email.
Well, and I'm also really interested on the ranch management, family ownership side, because I mean we preface this podcast talking about the disproportionate amount of only wealthy people can own ranches, and one of the problems and implications with that is that the actual operators, the people producing our food, can't afford to buy land that they operate on. So this is all early stage, and there's a lot of details and technicalities, but the opportunity or the potential for family ag operations potentially to access the resource they need, land, without necessarily having to buy it outright. Whether they could be kind of in an investment partnership, so to speak. Where they could manage and like you talked about, it's like a company or like a fund. The land is a multi-tiered entity that they manage and run and potentially have control over, but don't have to buy outright. Other people could invest in, and like Coulter said, it's not hard to imagine that there might be investors that would actually be interested in that, to be able to say, for a couple $1,000s, you own a part of the West. You're helping support a family farm potentially, or you're part of the food supply. You're part of the preservation of the West. I mean, those are all interesting potential outcomes.
Yeah.
So,
this.
Sean, is this theoretical? Is this what's on the horizon? Or, I mean, we do have crowdsourcing, crowdsource funding. There's several platforms out there. CrowdStreet is one I'm familiar with for commercial real estate. And we've been crowdfunding venture capital investments. We've been crowdfunding donations. So that I'm familiar with crowdfunding, crowd investing, or tokenization. Is this happening with legitimate alternative assets already?
So there's the best example I could give you is that there's a company called Liquify out there that's creating a platform to allow you to trade, alternative investments like it's a open market. And one of the examples I'll give is they actually tokenized a copper mine in South America, and it's being traded very infrequently and it costs a lot to kind of get in there and trade it, but there's liquidity for a copper mine in South America, right? So it's being done, but I would say if you're thinking of a baseball game, this is inning 2, maybe even inning 1. It's very, very new, and there's a lot of challenges from all the stuff we just talked about. A lot of challenges to be able to effectively do it. And going all the way back to where we started, how do you protect investors, right? Because you're going to have a lot of bad actors in this space. That's unfortunately what happens when there's anything that you can make money on in finance and insurance industry. There's always going to be bad actors. And so, my entire goal is to create a platform eventually to provide that layer of due diligence and fiduciary responsibility to make sure all these non-accredited investors or whoever's investing in these properties, and not just ranch land, but think of all the other alternative investments that we talked about, commercial real estate, private debt funds, infrastructure, movies, art, intellectual property, all of the types of alternatives. The average person doesn't even understand stocks. So to build that barrier to get into alternative investing too, you have to have some layer of financial literacy and education for whoever's investing in those. So that has to be part of it. I think otherwise people aren't going to know what they're investing in. And if, markets go up and down, like we're talking happy and, I think typically ranch land appreciates, right? I mean, has there ever been a negative year in ranch land?
Yeah, for sure on a 1 year basis, but basically our
5-year hold period.
Yeah, or more like 7 is the longest. Yeah, that's what I always say is you can't not make money holding for 7 years in ranchland in Montana over the past 30 years.
How do you make money in real estate? Time and money.
Yeah, and that's the extreme. That's if you bought pre-crash and had to wait to recover. But so just depending on the timing, but a couple years.
Yeah.
So they're with events like GameStop, irrational, emotional, and buying. There would have to be a fiduciary, an agent who's looking out for your best interest, because the average person wants. I mean, email me, people. Tell me if the average person wants to invest in a Western ranch setting, but they don't know what they're getting into, and so they do need to be protected. And there are going to be bad actors, but a lot of this is going to be taken care of because of technology, because we have better transparency. You have the blockchain. You can track exactly the source of the money. There will not be a lot of washing of blood money out there and drug money, like they say is happening with cryptocurrencies. You would track it back. You would actually own a piece of the ranch and know who the investor is, and they would know to that day what their dividend is going to look like, or their K1 depreciation that they're going to be able to report on their tax returns as a write down against their regular income. So that is great. Let's talk about this as liquidity for ranch owners, as Andy was mentioning. If because a lot of these people who've been chiming in on Facebook have asked about, find me an investor. How do I sell part of my place to finance the rest of it to keep going? So ranch owners are looking for liquidity. And the problem is some of them are looking to have their cake and eat it too. They want liquidity and full control. But let's say someone is actually legitimately interested in the revenue cash flow model of their place, and they say, I could clear up some debt here. I'll sell a third of this, offer a 2% preferred return, and is this tokenized? If I tokenized my ranch, is there a marketplace? I mean, how would I do that? Sell 1/3 of it to the masses, to 100,000 people?
I mean, you basically have to recreate what Goldman Sachs has been doing for publicly traded markets, right? I mean, they take a private company, they go on a roadshow, pump up the company and say, hey, how many shares do you guys want? And they create buyers. So no matter what company you ever build or fund, customer acquisition is the number one problem. It's the number one challenge you got to solve. So I think the first step is figuring out, are people interested in investing in ranch land? If yes, you're talking millions and millions of people. So then you have to create a mechanism to where if that ranch owner wants to liquidate a piece of it, and the analogy is like if Apple's raising capital, they sell more equity shares, or they go raise debt. They go issue more debt, right? Same thing would apply to a ranch owner. If they want to raise capital and liquidity to maybe expand their operation or whatever they want to do with it, they can tokenize a piece of their farm. You don't have to do the entire thing. You can have different types of shares within that structure. But let's just pretend that they do that. Now they have, let's say, $10 million ranch. They tokenize 2 million of it, right? So now there's $2 million worth of tokens that would go onto a platform like a Coinbase or a StellarX, some type of platform where I could open my app and go buy one of those tokens, and now I own a piece of that ranch. If you just did that without marketing and trying to get people interested in actually investing in ranch land, and had a separate app that I was kind of talking about as a fiduciary, where you're marketing to these people to try to get them to invest in it, you still have to create liquidity on the back end of that. So I think if you just did it without doing any marketing and you didn't find out if they were interested, and then the tokens were just there, I think it'd be bad. You have to, first create liquidity by finding people interested in investing in it. And then if you have an application that has followers like a CrowdStreet or, whomever, you find interested buyers. It's just like what you do in brokerage, right? You have to find a buyer for the seller. They're selling a piece of their ranch, not the whole thing. The buyers in this case aren't an ultra high net worth investor. They're a bunch of smaller investors.
It makes me think if who's likely to do this first is a wealthy landowner that's I don't know, idealistic or needs something fun to do. I mean, we see this all the time. Things like regenerative agriculture and progressive things are often done by people that have the money to play it out first. Don't have the highest risk. So I wonder if we'll see something like that. Just creative. It's just creative land management or land development strategies that we've seen more in a physical realm, like creative development strategies like the Sun Ranch and the Madison or different things like that. But if somebody's going to come along and take this essentially into the digital space, is what we're talking about, which is pretty interesting because it's digital space. It's ethereal. It's not on the land itself.
I mean, anytime you democratize something, it seems like that is long-term good, that you're actually creating value and you're improving society in general. I mean, I do not like Twitter, but they democratized opinions. Everyone was allowed to state their opinion.
Well, another thing that comes to mind, we've been talking a lot about the potential for quote unquote average, or just average investors to get involved, and whether there's interest or in demand. And we do want our listener base to weigh in on that. But I've heard this for a long time too basically from progressive financial advisor types like yourself, who say there's a lot of investors out there hungry for alternative investments. Whether not that the market hasn't been good in general, but either they want something they're more connected to, or there's various reasons, various motivations for alternative investments that I keep hearing. They want more tangibility or something they can connect to, or even the local movement, instead of just being kind of on this international marketplace for equities. Can I put some money locally? We have a lot of people, high net worth people, that are relatively new to Montana, and they're in love, and they want to actually put some of their money on the ground here. So there's also that side of this thing, not just maybe lower entry point investment, but I'm thinking about actually high net worth individuals that want to do different things with their money.
Really good point. And I think you hit on something that's not, it historically hasn't been what, the baby boomers and others have. Traditionally, their investments were 60-40, right? You put 60% stocks, 40% bonds, or, 100 minus your age is, the typical allocation. But I think what you're seeing with millennials and Gen Z and these younger generations, there's going to be $60 trillion in wealth transferring over the next 35 years from that traditional, asset allocator to millennials and Gen Zs that care about the company they're investing. Start getting into ESG investing, which is environmental, social, and governance. That's the traditional kind of public equity type investing in companies that have a mandate of, let's say, by 2030, they want to be net neutral for their carbon footprint. 45% of millennials care about that. That's a lot of people. And, and not just millennials, but you think of women investors too. There's going to be a hell of a lot of wealth transferring to women, and 90% of them, based on Goldman Sachs, JP Morgan, very sophisticated research companies, say that they also care where their money's going. It's no longer, let's blindly put it into the S&P 500. They want to invest in companies they believe in that are doing the right thing. They're aligned with their values. And so that's called values-based investing. You're investing in companies not for the return necessarily, but because their values are aligned with yours. And there is a return premium for that, and it's a psychological return. It's not necessarily, a monetary return. It may be less than if you were just to invest in the S&P, but the intangible benefit you get from doing that, same reason why people, bought Beeple's $69 million digital art piece through this token mechanism. It's not worth $69 million tangibly. It's intangible value is why people pay for that. That's art in general. It's not rational, but that's the whole point, I think, of democratizing alternatives and also aligning that with impact investing and ESG, which, Coulter, I know you're raising grass-fed Wagyu, correct? Was okay. But if
he's in recovery.
I try to quit bad habits.
Okay. He's trying to get over psychological investments.
Yeah. Well, to simplify it, investments that align with people's values. I think there's, for grasslands in general and ranch land, there's the potential for carbon sequestration. So I don't know if you guys have had anyone on talking about that yet.
We have talked about it, but not in depth. Other mitigation experts.
Yeah, and we're bringing in another guest who's going to talk about monetizing the carbon sequestration credits, how you can marketplace those. And are you saying that you could tokenize your carbon sequestration credits, or you could tokenize your mineral rights, or you could tokenize your wind rights?
So, I'm not an expert in carbon offset markets by any means, but the way that I understand it is if you have a company like Exxon that has, however many tons of carbon they're putting into the atmosphere, and then you have projects like, let's say, a regenerative agriculture project where you're actually creating deeper roots into the soil and it's pulling carbon out of the atmosphere. There's companies that come in and they measure, what the sink is. How much carbon is this actually sequestering? And then there's a market for the offset. So if you're a company that has a positive footprint, how much do you have to pay to get to zero? And a hell of a lot of companies are saying by 2030 their goal is to get to net zero. Net zero means you're buying offsets. You're not going to eliminate it just by driving electric vehicles and putting solar panels up. There's always going to be some component. And analysts estimate about 15% of, kind of by 2050, let's get to neutral. 15% of that's going to have to be by offsets. So you can't eliminate all of it just by changing behaviors and, solar or whatever. So the answer is yes, you could tokenize that. There's actually a token out there, and the name is slipping me, but they basically have carbon offset programs. So it's a company, just like we've been talking about, but that company's investing in these carbon offset programs, and then they created a token that you can go buy that has a negative carbon footprint. So when you buy one of those tokens, let's say you buy a Bitcoin that has a positive carbon footprint, you buy a certain amount of that token that offsets the carbon footprint of the Bitcoin.
Yeah, and I'm no expert in carbon or carbon markets either, but there have been ranches, there have been properties that have sold in Montana that reportedly were part of a carbon offset program, and I think the model particularly is taking cropland out of production and putting it into grassland. That's a heavy carbon sink. But there was a ranch just outside of town here that was reportedly purchased by a plastics CEO, and that he was getting some carbon credits. But whether those actually transpired, I don't know. And I have been asked before that, we've seen talking about bad actors, or maybe I'll be gracious and just say innovative looking for new alternatives. But I've been called in on some projects where they want the value bumped up of a transaction or because of the carbon offset potential. And my understanding is those markets just aren't established yet. I mean, certainly as an appraiser, I can't say, oh, this ranch has $1 million additional value because it has carbon offset potential. And I've been asked to do that, which is it makes you laugh, but I think it's coming, and I will say that topic comes up more and more and more, and I've gotten calls from brokers, I've gotten calls, so it's on the horizon without a doubt. But I think those markets aren't really established yet, though, isn't that correct?
Or 100%, yeah. It's the price for a ton of offset ranges from $15 to $700.
Yeah.
So it's like, and there's really no standards out there yet. There's no real. There is a marketplace, right? But there's no standard, and it's it's like the Wild West is the best way that I can explain it. Bill Gates is actually they have a company that they work with a company that basically has a gold standard for what a carbon offset is, and they go through their own evaluation process. So it's again inning 2, I would say.
Yeah.
And a lot of these things are inning 2, which is what makes it so exciting.
Well, isn't part of the? I mean, just to go into essentially starting any new market, which is we've been talking. That kind of runs through this whole conversation we've had on this podcast. The scary thing is you got to start a market, and you just don't know how it's going to shake out, right? You just got to, build it, and they will come, and then the market establishes itself and finds its equilibrium, and then you move forward. But it's pretty scary, especially early investors or early developers. I mean. It's a high risk.
So, and that takes me the next steps, Sean. Where do we go from here? It seems like we have the technology. Blockchain would make this transaction very low cost, transaction cost, very high transparency, great for the efficient market hypothesis. Lots of buyers, lots of sellers, great for efficient market hypothesis. Liquidity, again. So, blockchain. Tokens using the blockchain, it's there. We have the technology. It's proven technology. It's capable. It seems to me like, and we don't want to go public because when you go public, now you lose the portfolio theory value of the alternative asset. Now your stock is going to track with the market, and it's going to be highly exposed to interest rates, and it's not true to how the actual performance of that asset. So it's almost like you want to keep it semi-private, avoid the SEC, avoid public markets, although you want access to the masses, you want to democratize it. is the next step there needs to be an exchange, there needs to be a platform, there needs to be a marketplace, two-sided marketplace created to where ranchers can tokenize their ranch and retail investors can buy tokens in that rancher's place?
Well, those exchanges already exist. They're the same exchanges that you would go buy a Bitcoin or Ethereum or any of these other cryptocurrencies. Like when I mentioned Coinbase or StellarX, those are exchanges where you can buy and sell tokens. I think it would probably be a worthwhile exercise to imagine just creating an exchange specifically for the buying and selling of asset-based tokens, not necessarily cryptocurrency, which is not asset-based, but actual fractionalized real assets, an exchange specifically for that. So yeah, I think you're right. That could be the next frontier of it. I think before any of that happens, it needs to be understood that do people even want to invest, right? Because if there's nobody that wants to, I mean, I'm sure there's a percentage of the population that would love investing in ranch land, but it does cost money to tokenize, right? Because you're doing a regulatory offering, just like taking a company public. So you have to file, it's either a Reg S or a, crowdfunding you mentioned, that's a Reg CF. You still have to file and it has to be approved by the SEC. So there's a cost to that. So if you're talking $1 million ranch and it costs $300,000 to tokenize it, doesn't make sense, right? So you're going to limit, and those prices should come down over time, the cost to do that. But there still is that inherent cost. So it wouldn't make sense for all of the ranches. But yes, an exchange exists already to buy and sell, but it would be interesting to create one specifically for asset-based tokens.
Is this something you would be personally interested in working on if someone out there was interested, that this is something that's kept you up at night and you're thinking, how do I create this market? If you're solving a problem, I mean, if you're going to create value in society, you have to solve a problem and give people a solution. I would say the problem is that teachers and widowers do not have access to investing in Western ranches.
Yeah.
So are you a guy that they can reach out to you on LinkedIn, nextgenfg.com, or your phone number, 406-422-0575. You're a Montanan. We take phone calls. We answer our phone.
Yeah, we never mentioned you're a Helena native and live in Helena.
Of course. Yep.
So we need to get that out there.
Is this something that keeps you up at night? Is solving the problem? How do I help teachers and widowers invest in Western ranches?
Yeah, I would expand that a little just from Western ranches to alternatives in general. Giving people that have been shunned from these markets access to these markets is one of my primary missions in life. And then a step further is getting them access to impact investing, because, I do adhere to that, methodology. And I believe that if you can give capital, get more capital flowing into that space, but $60 trillion in wealth transferring, and the majority of the people that wealth's coming to believe in that kind of stuff.
Give our listeners a quick definition of impact investing in case they don't know.
So impact investing would be, it's so broad, but a good example would be regenerative agriculture. Mm-hmm. If you wanted to invest in a project that was taking a non-regenerative, piece of land, converting it into a regenerative agriculture operation, you're having a positive impact on the environment.
And so impact in general terms just means positive impact, positive impact investing.
Yep.
Doing more than just returns on the investment, but social, environmental benefits.
Exactly. And that space in particular is reserved for institutional investors and ultra high net worth kind of multifamily office type groups, because the minimums to get into those types of investments are so high.
Right.
Now, what's funny is CalPERS, the people who actually are investing the pensioners' money, they invest in this kind of stuff, right? But then the actual teacher, they're getting a 60-40 portfolio at Schwab. And if you can change that dynamic, now you're just basically giving people access to a wider range of assets that should diversify their portfolio without sacrificing returns and hopefully increasing their returns.
Not to throw Schwab or any retail investment management company under the bus, but I mean, that's what keeps people poor, is they just 60-40, they can't do anything creative. Regulations stipulate that they're going to have to be so conformist.
I don't know if it keeps them poor.
It keeps them poor.
Maybe keeps them from being fabulously wealthy, but I don't know about it. I'm not sure if it puts anyone in debtor's prison or on the streets.
No, but
Yeah.
but average and people.
Yeah.
you can, as we've seen in 2020, a ranch I just sold, I valued at $650,000 2 years ago. It sold for $1.4 million. That created real wealth, real tangible wealth because of 2020. Your average person doesn't have access to that because it's going into their 401k. It's going into bonds, which are about to implode.
Yeah, so I think wealth inequality is a thing, right? I think it's widely accepted that there's wealth inequality in the United States and across the world. What tokens and this technology have the potential to do, and you're already seeing it with artists and musicians, it's getting the money more spread out. It's no longer being concentrated in the people who control, the wealth. That's the biggest, I think, disruption that I see, is it gives the opportunity for the wealth redistribution. So it's no longer an exclusive club. Everybody gets access to those types of investments, which may drive down returns because now there's more demand and, it happens supply demand. There's only a limited amount of ranch land, right? But I think that's, if listeners take one thing away, I think this technology has the ability to redistribute the wealth, which is what is fascinating about it to me.
And give us access to things we haven't previously had access to. So with real tangible alternative assets, if you find a Jackson Pollock, that was the name I was looking for, abstract expressionism. He's originally from Cody, Wyoming. I think that's just so badass and cool because he is the name for the art movement. If you find a Jackson Pollock or someone out there who wants to tokenize it, I'm in. Reach out to me. Big fan. Just proud that he's from this area, and he was really weird in New York City.
Yeah. Go to Masterworks. They do fractionalized art.
Awesome.
Yeah.
So it's happening.
Oh, of course. Oh, 100%. With art, it's already happening. I mean, you have even cars now, classical cars have been fractionalized, and you can own a piece of $1 million car, right? And baseball cards, like NBA Top Shot from Mark Cuban, like you can buy a fraction of a video clip from like NBA experiences, right? So yes, 100%, this is already happening. The asset-based component of it, the silver mine analogy that I gave, or the copper mine, that's how slow it's moving on actual asset-based because it's a little more difficult.
Well, and again, not only the teacher pensioner side of it, but I guess the supply side with the land resource. Again, I'm thinking about food producers, operators, and what the future of that, because right now, if you don't inherit a place, the prospect of being in food production, unless you're just going to go work for somebody, which is probably the model moving forward. But kind of what comes to my mind is the future agriculturalists, can they, be trained and educated in that, go to work, possibly go to work on a place that they could actually invest in as part of a token. It's a maybe I guess a publicly traded entity, or it's a fractionalized entity, and they run the place or work the place. But actually could invest themselves in through a tokenization. So maybe that's kind of the future of. When I wanted to be an operator and was coming out of school and was going around talking to FSA and guys like that, how to get started without owning a place, having a family place, and I was told, go back to school, get more training, and plan to work for somebody. Because I was hell bent on figuring out how to own a place, beginning farmer programs, that kind of stuff. And this was 20 years ago, 25 years ago, give it up. The prospect of owning and operating at the same time, unless you inherit land, is pretty much out of reach.
Well, it could be a reward system to attract good operators too. You give them shares of the ranch to come manage it, right? Similar to a publicly traded company, you get, private shares that, restricted stock type stuff. It's the same concept.
Yeah.
Goal and performance metrics for
Yeah.
so you don't have cowboys breaking equipment out there. And
Well, and what's interesting about all this, and Coulter weigh on this as well. I mean, obviously the dominating model right now is wealthy individuals buying these places and leasing them out or hiring people to run it. And the reality we know from being part of these transactions, that only works so well. There's actually a fairly high washout factor. I mean, a lot of people end up getting tired of that scenario. It's a lot of responsibility to own a ranch, even if you try to set up to be relatively passive. At the end of the day, it's a lot of work and a lot of effort on your part, and there's actually a fairly high amount of transition there. So that model only really works so well. I mean, forever I'm sure we'll have wealthy individuals that buy ranches and love it and want to be there and want to pass it on, legacy ownership to their family, that kind of stuff. But there's a limit to that, and so maybe this is an alternative that maybe more places should be in kind of a multi-ownership structure, I guess.
I think it's hopefully it's right around the corner, and we have people messaging us like Orion Stevens. He's a rancher in Hawaii, and thanks Orion for messaging us. And Dustin Kuykendall, he's also reached out, and we need creative ways for owner operators to compete with gentrification. Because when people hear of gentrification, they think of an old shithole mill district in a city, in an iron steel town, or an artsy district that was invaded by the wealthy, Harlem or Brooklyn. But gentrification is 2020 Montana ranch sales. The wealthy have moved in, have displaced the locals, driven up prices, changed the value, changed the culture, changed the scene. That gentrification has been a long time coming for ranchland sales, and landowners, owner-operators need a creative way to compete with that. And you've mentioned tokenizing operational metrics such as regenerative, holistic. You could tokenize carbon, wildlife, wind. So, Sean, where if someone's interested in this, as we wrap this up, where should they go next?
You mean just interested in investing in ranch land in general, and this kind of concept of you don't have to have $2 million to be an investor?
Absolutely.
I mean, it doesn't exist, right? So I think the first step is seeing if people are interested. And I think that's where, you have a great following that can give you some insight into that, I think. So, but I mean, the next step, go to YouTube and Google NFT or just start learning, right? And I'm always open to have conversations with people about this kind of stuff because I love it. And I think that, the next at least 10 years of my life, I'm going to be trying to figure out how to do it. So I'm always going to be learning more. And I have partners and I have, a couple very, very smart individuals that have actually started companies to tokenize so that they already have their operation in existence that allows you to tokenize a ranch or a company or whatever. So, I mean, if there's people that are interested in actually tokenizing, one of my partners is actually capable of doing that at this point. So give me a call.
Man, that's a lot to unpack. And I love it because this is going to be revolutionary. When you bring that bar down, the barrier to entry, you're kind of knocking down the walls or breaking the glass ceiling, whatever analogy you want to use. I think this will, just like gentrification, change the face of ranching and Western land ownership. This democratization and tokenization of land ownership is going to change society.
I agree.
Powerful stuff. Thanks, Sean.
Yeah, thank you guys for having me. That was
great.
fun.
Yeah, and finally, one more shout out. I got to get my plugs in. Thanks to Robert Majerus, the ranch manager at Shields Valley Ranch in Wilsaw. Andy, do you know him?
Yeah,
when you lived in Wilsaw, he reached out, had some good feedback, and very talented guy. He was talking about ranch managers need to come together and have more peer support and be able to talk to each other about methods that are working, improving, and we talked about regenerative agriculture, and So you ranch managers out there, get together, kind of like he mentioned, Robert did, Executive Link through Ranching for Profit. Dave Pratt puts that together as a peer study type group. But yeah, there's improvements that could be made so that each ranch is not operating in a vacuum as its own little empire or island. Thanks, Robert, and thanks to everyone for listening. Please hit us up with your thoughts.
Thank you, everybody. Thanks, Sean.
Thanks, guys.
Thank you for joining us today on RanchInvestor.com podcast. We have a few things of note, some housekeeping to take care of. Coulter DeVries is a licensed real estate broker in Montana and Wyoming. Andy Ron is a Montana certified general appraiser and accredited through the American Society of Farm Managers and Rural Appraisers. Denver Gilbert is a licensed real estate broker in 4 states. I say this because there are still 12 states that are non-disclosure, meaning we do not have the privilege of releasing private and confidential information from certain land markets. We have fiduciary and agency relationships that we take very seriously and would not seek to compromise these duties. In this podcast, we do not report information pertaining to specific clients or market participants unless it is public knowledge. Our reporting is not to be misconstrued as legal or financial advice, even though we may have opinions as to what one ought to do when it comes to ranch and land investing. Advice is only worth what you pay for it, and you are receiving this for free. So if you would like further information, please reach out to any of the hosts or guests on your own accord. We enjoy hearing your feedback, so please post in questions or comments to our Ranch Investor private group on Facebook. If you do not have Facebook, please send to comments@ranchinvestor.com, and thank you for listening.